All right, everybody. So I want to show you how I like to trade meta. It's been profitable for me this year. The way that I approach it is a little bit different because a lot of our longer term trades are at the money or in the money. Melissa trades are at the money a lot of the times, but there are certain names with just like big personalities that they're expensive, right? And a lot of traders will avoid trading them because they probably learned a lesson a long time ago or they're just afraid of it. They move a lot. So with a name like this, I don't steer away from our overall methodology. We're still looking for supply and demand. We're looking for levels and we want to trade those. But the big difference here is that if I'm going to trade meta, then I'm able to look at the option chain and I'm going to actually go with something out of the money. So I just took a quick screenshot here and I just entered this trade, right? And again, not the best approach if you're trying to teach like, you know, well, let me back that up. At the money, in the money don't mean anything if you're wrong. So I wouldn't say it's not the best approach. So the best approach is actually using the levels that you use on your chart and you execute a trade. When identifying out of the money type options, I want to be looking for the overall ATR, average trading range, and so forth. Okay. So I'll put an average trading range on. We'll look at that here in a second. We want to know, can price move from this level and could it possibly move up towards 700 again within the window of time that we're buying? In this case, we're buying 17 days. We have a catalyst tomorrow. We have Nvidia that's going to report, and we want to know, can that affect Meta? Of course it can. It could affect the market, and this could get a nice little bounce, or it could continue to drop lower into some zones that I'll show you here in a second. Okay. Now, doing so, what it also allows me to do is, if you're shaky, right? If things are not going well for you and you're trying to buy the dip, look, we're all conditioned to try and buy the dip. The market's been great, but sometimes buying the dip, you just keep buying the dip. And here you'll notice that these options at the money at 650 are trading for 1975. That's $1,975 a contract. And one thing I want to keep you clear from is don't do what a lot of traders do and just buy this because it's cheap, right? I'm buying this because we're at a level and we could see a bounce, okay? And I don't feel like paying up in a market that's having a hard time. I don't want to pay $1,900. I know that these could still easily go to $6 or $7. If you look up here and you go to, 6 or 7, that's only $25 away. And we know that Meta could literally get a $25 move that fast. Okay. Especially if the market starts finding demand and things start going up. Okay. So again, I'm going to take this out of the way. I'm going to look at the chart with you and go over why I'm buying the chart or buying the name, if you will. So price has pulled back significantly from the highs that are around 740, 750. And here we are $100 down lower. Now, this candle here represents, to me, demand. All right. It's not the structure that I teach, but what you notice is that this candle here, this one right there, is bigger than the rest of the candles. Okay. So that tells me that there was a lot of demand in here for the price, right? Trader showed up, boom, things started going. And now when we run out of buyers, price goes back to where they remember where people are willing to pay up, right? Demand, just like a brick and mortar store. If you got something that's too expensive, people stop buying it. I need to sell my product. I go back to the place where I remember people buying my product. And that happens to be, in my eyes, right in this area. Okay. So I have a trendy edge here. I have a bigger candle here, and I was just showing you guys a little bit of, you can come in here. Now, I don't like using volume because I feel like it's very noticeable when you look at this. You can see the consolidation in here. You can see a bigger candle. Of course, there's going to be volume here. All right, but if you want to double check, you can use something called the VRVP. I don't use that. It's a free indicator. A lot of people use it. And basically what it does is it's showing you volume ledges, all right, so where the most volume is on the stock. And this is the same thing, but on a trading view. And there's that consolidation. There's that big candle right here. And if we were to follow price and go across here, you'll see that we do have a volume ledge that happens to be in line with around the same area that we're buying this option. Okay, so a couple things. I'm buying at a level. In this case, I'm buying out of the money because it's a volatile stock. It's a big stock, and I don't have to go at the money. I understand deltas, and I understand that for every dollar we go up, I could make 50 bucks. And if this thing ran $25, that would be a huge win. But I'm also buying time, and I understand that this can also make us money just by buying out of the money. Matter of fact, a lot of our traders that come to Simpler or to Simpler in the Trendy room is that, they're like, man, I was always told not to buy out of the money, but you've done it with success, and this is how I do it. The next step is I'm going to come over here and make sure that the time you're buying makes sense, right? So we're buying a 700. That's 50 bucks out of the money. That's pretty damn far away. Okay, I agree with that. All right, but how much does it move? How much does Meta move? That's what I want to know. So for me, I have an indicator over here, and it's going to show me the ATR, or average trading range, or average true range. You'll notice here the weekly says $40. So that's an average. Okay, monthly is 66. Okay, so the question that I have to ask myself, if I'm right, can price move back up to 700? Now remember, in options is more of a time variable. I don't have to be right. Like, I don't have to get to 700 today, but we do want price to move in the right direction. All right. And I want to know, if we were to bounce 40 right here, guys, that would be a 690. And that's just in a week. And in this case, we bought just over 2.5 weeks of time. So can it happen? 100% it can. Okay. We could have a catalyst tomorrow, and this thing could rip up to 740, and that would look really, really nice, right? Like that not 740, sorry, up to 690. You could see 40 additional points, and that would be pretty sick. But what if I'm wrong? Okay. Well, I'm putting up a fraction of what it would cost to get at the money. Easy when things are going in your way to go, well, the better option, we could have made more money, guess depending on how much you put into it, if we went to at the money. But there's also the scenario where if it doesn't work out for us, let's say NVIDIA is a catalyst to continue to push the market down, and we find ourselves down here towards another level that I really like, towards the 600 level, then guess what, guys? I lost 380 bucks opposed to waking up with $1,800 contracts, right? And being down to 400, and I've lost $1,400 a contract. So this is the type of trade that I personally like. And just in these few minutes that I've been talking to you, the prices have moved from 370 all the way to 450. And that's how you can make really quick money trading out of the money.